What's up, guys? It's Ryan G from the Bro Street Trades. No intro. Let's just jump right into it. Yay, yeet. All right, so I'm getting a few questions about the TTM squeeze, which is down here. How does it work? What does it do? How do I use it? I'm not gonna go too far in depth about the history of it and things like that. I'll just tell you what it is, more or less, and how I personally use it. Might not be the same as everybody else's, but let me just run it down to you real fast. So basically, what happens is that when these Bollinger Bands, you can see here, Bollinger Bands, gets inside these Keltner channels, when the Bollinger Bands get inside the Keltner channels, what happens is that prices squeezes, meaning that it's just compressing and getting prepared to make a really big move. As you can see here on these red dots are indicating a squeeze, and these light blue is indicating momentum to the upside. So even if you weren't sure about the price, this TTM is already telling you that it's squeezing and with bullish momentum to the upside. Vice versa, this was a squeeze to the downside, as you can see, and it fired here. You wouldn't have got much out of that. But this is bearish momentum. This is decreasing bearish momentum. This is bullish momentum. This is decreasing bullish momentum. So light blue up, dark blue maybe sideways or slightly down, dark red down, yellow slightly down or sideways. So when price is squeezing here, this is your indicator. Once this goes green, that means fire. That means take it long. And the reason how you know to take it long to the upside is because yet again it fired with bullish momentum. Bullish momentum. Now this is I don't personally trade it with this up here. I do not trade with these Bollinger Bands up here. I actually like my charts clean as I don't know what. I like them clean, 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 so I can see. This right here is the 8 SMA, and this is the 200 EMA. And I do have VWAP, but you can't see it on a daily. So how I trade the TTM is this is exactly what I do. So you see prices squeezing, right? I know it's moving in the channel, TTM squeeze. Most people don't know, like when something's moving in this channel, people will just ignore, say, oh, it's in the channel, it's moving sideways, it's consolidating. Which most of the market is mostly in the range, regardless. What people think, 85% of the time, the market is in a range. It doesn't just go straight up, and it doesn't just go straight down. It's most likely in a range. What people don't realize or fail to realize what's happening is that most of the time it's squeezing, coiling up, and getting tighter and tighter and tighter to make an explosive move up or make explosive move down. In this case, it went up. So how I do it is I draw the resistance and I draw the support, right? And even though this might be going to the bullish side, I would still look to see if it's going to break this way. But since we already got above this resistance, right? Notice we fired here on this day right here. We fired here right before as it was getting resistance. Excuse me. Excuse me. And what I do is I wait until price retest or closes above the resistance, such as that we did here, and I personally get in long off this fire. I took calls here, closed them here. Then when it came in for a retest, I got in here, closed them here, and I did not catch this full move, but I caught a nice chunk of it in at $350 per contract, out at 550, in at 300, out at 550 again. I'm pretty sure like 525, I think. Nice moves, but you could have caught these. The contracts I was in, the 350 calls, wound up being up $2,200, $2,500, something like that. And as you can see here, I actually had no reason to close this position, but there's always so many stocks that's going on that I'm not just eyeballing one, right? Now, another thing that I look for is confluence within the market. And what that means is that, so Goldman Sachs, right, is a bank, right? So what I look for is another bank. So let's use Morgan Stanley. Morgan Stanley, same situation. If I just draw the support and resistance here, let's just call that, let's call that right here. Right, so price moving sideways, squeezing, and finally we get a fire right here. Still not above it for me, but maybe your resistance line here. Still not above it for me. Still not above it for me. And as soon as price would have got above, this is where I would have took it long, and I would have caught this. Like I said, I played Goldman Sachs. I did not catch this, but I would have caught this as price would have got above the resistance first. And as you can see here, you could even got in on the retest here, because it's still fired and it's still kind of bullish momentum, even though it's dying out. You still try to get in long in here. More confluence. Let's go to Citibank. Squeezing independent here. Look how long it's been squeezing. Squeezing, 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 squeezing. Finally, right here's our fire. Right here's our fire. Gets above, gets a retest here, and then price pushes off. You could have caught this all the way until here to supply. Now, this right here is my 8 SMA. This is my 200 EMA. Now, one thing you can do if you want to trade exclusively with the TTM, which I don't do, I trade supply and demand. You can turn on this, put the 21 SMA on. Now, the rule of thumb would be is if it's above it when it fires, if it's above the 21 SMA, then you're going to take it long. And if it was below it, you would take it short. Go back to Goldman Sachs. As you can see here, it's above it. 21 day moving average. It's above it. You would say, okay, I'm taking it long. And if you would have said, I'm not getting stopped out until it breaks this, you would have never actually been stopped out of this trade. Morgan Stanley. Fired here. You would have said, okay, it's above the 21. Let me get in. You're never stopped out of this trade. You catch so much of this. So that's actually the way I trade it. Well, minus the 21. It's really not that hard. I do recommend taking the Bollinger Bands and the Keltner channels off, even though that's the way that it's taught to trade it by the person who created it. I would not use it. I would just use that. I would just use support and resistance, and once it breaks one way, and if this is confluence with you, go. This is not a end all be all. It will give a false signal sometimes. Like, it's saying bearish momentum here, right? But then price wound up going up. It gave you squeeze in here again, and this day it probably looked like it was going to squeeze to the downside, and it did not. And that's why you wait for the confirmation of price to go down first before you get a fake out just like this, because I promise you this day got faked out, and that's why price shot up higher, because everyone got in short and they got squeezed out and pushed price up higher. I guarantee you. So I hope that made sense. If anybody has any questions, you can ask me in the Discord, which will be in the description down below, or you can comment on the channel if I feel like on the YouTube comments if you feel like I missed anything or you feel like you didn't understand it. I'd be happy to help. Till next time, guys. Take care.